And so we believe very, very firmly that anyone can be an entrepreneur.
If you just bought and held the top 10 stocks from today and you held them for 10 years, I guarantee you'd more than double your money in the 10 years.
Wow.
Hello, everyone. Welcome to this week's Wealth Within School for Startups radio update. I'm excited to welcome, as always, Dale Gillham to the show. We're going to talk about all of the things market related and get a market update. Dale is, of course, the author of Accelerate Your Wealth. It's your money, your choice. You can find him at wealthwithin.us. Dale, welcome to the show. How you doing this week?
Oh, I'm fantastic, Jim. It's Christmas time. You've got to be happy, don't you?
It is. I have all of my gifts done. I'm ready. I can't wait. And now all I have to do is assemble the toys. So I'm ready. I'm excited.
Oh, fantastic. Well, I get to have a little bit of time off. It's because it's our Christmas is our summer, so it's our time off. We have a few weeks off, so it'd be nice to have a little bit of a break.
We all deserve it. All right. Great market for the week and some huge news. Who would have thought we would have wrapped up 2 trade situations in 1 week? It's just unbelievable. Oh, and an impeachment too. All in 1 week.
Well, they say a week can be a long time in the stock market, and this week has definitely been a big week, hasn't it? Or last week was a very, very big week with the US-China trade deal, with that phase 1 deal that had been reached between the US and China, and that's really has averted an escalation of the trade war with higher tariffs that was set to kick in yesterday on the Sunday. But as Mr. Trump tweeted, they have agreed to many structural changes and massive purchases of agricultural product, energy and manufactured goods. And that's what he tweeted the other day. But he also added that existing tariffs would remain in place, though, but that the penalty tariffs weren't going to be imposed. And I think that's all really, really good news that phase 1's done. Obviously, Trump wants to be known for doing something, and I think that he really does want to get this trade deal done with China, because that'll augur well for the election year coming up, 2020. With the election year, they want to get it done, and they want to get it done as soon as they possibly can. So I think that's great news.
Do we have any grade to give the actual deal itself? I've heard some people say the deal didn't accomplish very much, but then Trump pointed out they hadn't done anything. At least he had done something. Do we have a grade yet for the deal itself?
Look, I don't think we've got. Still a little bit of conjecture about things, but the first rule in negotiation is find some common ground. And really, that's what they've done at the moment. They've actually agreed to something more than just increasing or putting penalty tariffs in, all those sorts of things. So we've stopped that bullying or pushing and toing and froing between the two, pushing each other, and now they're agreeing. So that, to me, that's a very significant step forward, because now they've got that common ground. Now they can move to the next phase and move through. So I think the first decision is always the hardest one, they say. So the first hardest thing in making any big decision is to make that decision, and the rest just follows on. I think that's what we'll start seeing now, as the rest will start being, all the details will start getting coming through, and they'll start agreeing to a whole lot more. So I think it'll speed up quite quickly from here. So hopefully within the first quarter of next year, they wrap it all up. That would be my hope for what's going on, so the world can get back on with other things that are a bit more important, and the market can get rid of that boat anchor that's been holding it back a little bit.
And then what about the MCA, the deal with Mexico and Canada? Again, done in the same week. It seems like it had to be tied to the impeachment not looking politically certain. Something that Nancy Pelosi's been sitting on for months is top stage out of the blue, but good news for us, right? We wanted top stage, and it looks like that'll help move it forward.
Oh, absolutely. They always say, timing of news and timing of different announcements by the government, they do that all of the time, just because obviously what they're trying to do is get re-elected, more so than what's necessarily great for the country. And I think we see that quite often nowadays with politics, which we didn't see 100 years ago or more. It was more about long term, and I think a lot of our politicians think a little bit too short term. and they think to the next election. That's what they're really thinking. Whereas I think with this China trade deal, Trump's actually trying to do something very long term, and I think that's great that he's actually doing that and he's pushing it through. But he's trying to get the US a better deal, because the US really is in a much better bargaining position nowadays than what it was even 2 years ago. I mean, the economy's doing better, employment's really, really low. We got growth in terms of wages. We're 3% better in wages in the last 12 months. Manufacturing's doing better in the US. So therefore, all of that means that the US needs China less because it's doing better. Now, to me, if they get the deal done, then it's just only going to be that springboard. Or as I said before, it's really going to cut that boat anchor so that the US economy can really start to take off. And we'll see that coming through into the market as well.
And then number 3 for the week, Brexit leading to a third trade deal. How long do you think it will take Boris and Donald to make up, and have a good UK-American trade deal? I think it'll happen pretty quickly there, don't you think? I think they want it to happen fast to show up how much in unison they can work together. What do you think?
Oh, look, absolutely. I think, Boris really does need to get some deals done very, very quickly to prove that the exit from the European Union was the right decision. I mean, obviously the public wanted it, with the Conservative Party having a landslide victory, or unprecedented landslide victory Friday in their election. So to me, the UK really does need to lock in a few of these trade deals. Now, they're going to lock one in with the European Union anyway, but they do need to play on the world stage, not just with Europe nowadays. So I think it's very, very critical that they do, have a nice chat between Boris and Mr. Trump and get a couple of deals done. But interesting, the UK is the first country to ever leave the European Union, and it's been running since, I think it was after the Second World War. It started getting set up with Winston Churchill and a lot of the countries mainly to stop war in Europe and strengthen everything there, and obviously that democratic election process, etc., rather than dictatorships that the Germans were doing. But I think it's going to be an interesting time the next 12 months with the UK. And if again, it's going to cut the boat anchor for them. Their market over the last 2-3 years has only gone 2 or 3%. So it's done very, very little as everybody's waiting for Brexit to happen. Because again, it's a foregone conclusion. We know Trump's going to do a deal with China, and we know Brexit's going to happen. So to me, I think we'll see the UK market take off quite well.
And 20, 30 years from now, do you think they'll be making movies about Boris and Donald the same way we make movies about Margaret Thatcher and Ronald Reagan? The reason I bring that up was Boris's victory was almost the same as Margaret Thatcher's victory in 1983, which really cemented her position as one of the most powerful prime ministers and most successful prime ministers of the century. So you think we have the same dynamic going on again, two very compatible leaders?
Yeah, you've got two leaders who have interesting traits. I mean, obviously, Donald Trump with his...
That's very diplomatic, Dale. Interesting traits.
Yeah, I was trying to be a little bit diplomatic. I mean, Trump just tweets all the time, and he knows he's moving the market. He's also a little bit eccentric in a lot of different ways. And being a billionaire before you come on to being the president, that's an interesting story in itself.
Yes.
And there's been lots of documentaries about Trump and his empire. But, Boris is another case. He's quite an interesting person on the other scale in terms of the UK politics, in terms of their landscape, in terms of his personal exploits, I suppose, if you want to say it that way. He'd be an interesting character and he was obviously the Mayor of London, so there's a lot of good stories there. But, I mean, Thatcher, she was one of those ones that looked out 50 to 100 years for the UK and pushed a lot of... She did the hard stuff, and I remember watching General Norman Schwarzkopf, I can't say his name, General Norman Schwarzkopf, from Desert Storm. I remember him speaking one day at a big conference to 10,000 people, and he said, as a leader, you just do what's right. You make the decision that's right for everybody. It may not be possible, but you do what's right, and that's what Thatcher did. She did what was right for the UK, and then the UK come out of the doldrums and had very, very good growth over the years from there. So, and that's what I was saying is a little bit lacking in a lot of our leaders around the world. They don't necessarily do what's right. They do what's right for them. to get re-elected rather than what's right for the economy. And that's one of my little beefs.
Let's change topics altogether and talk about a macro timing issue. So you put together some analysis that timing really is everything. Go through that, and then let's talk about what time we're in right now. So 70 years ago, if you had invested in 1950, let's start there.
Yeah, what I do is talk about this in my book, Accelerate Your Wealth. A lot of the industry says you got to be time in the market to yield good returns. And they say because it's impossible to time the market. Yet that's something I do all the time. It's my job. And I am timing the market. But if you'd invested $1,000 in the S&P 500 on the 1st of January 1950, and that was just before this huge economic growth through the US in the 1950s. Now your compounded return today, 7 years later, your $1,000 would be worth $187,000. So that sounds massive, but the law of compounding says most of it comes in the later part of that time. And if you'd look back 10 years ago, it was around about $73,000, so less than half of that. So in the last 10 years, it's doubled in terms of your $1,000. But interestingly, if you'd invested $1,000 on the 1st of January 1990, again, prior to a bull market, today after 30 years, it'd be worth $9,000. But if you invested $1,000 in January 2000 after 20 years, so we're talking about 10 years later, so after 20 years, your $1,000 will be worth $2,167, because you've got to look at the bull markets and what bear markets is in there. And so we've had the 87 crash, then we came a bull market out of that, then we had a downturn between 2001 and 2003, then another big bull market into 2007. But here's the real kicker. If you'd invested $1,000 on the 1st of January 2010, so now only 10 years, so we've halved the time frame, you'd actually have more money. So after 20 years, you've made 2,167, but after the last 10 years, to today, from January 2010, your $1,000 would be worth $2,854. So more than that you would have got for 20 years. If we have the time frame again for 5 years, you'd have $1,547. So those little shorter time frames, and I always say this to investors all the time, is when you invest really it does count, because I can be in the market for 6 months and make more money than somebody being in the market for 12 months. Just buying the same stocks, just because the market does have dips, and sometimes it has very big dips like the GFC. So if you avoid those times, you'll make far more money, and the compounding will happen because you're buying low, selling high, and then getting out of the market and coming back in later. So in the GFC, I had my clients or our clients in cash, and I think we lost about 6% off the top of all the portfolio, 6 to 9%. And then we came back in at the bottom and they compounded their returns. Whereas most people held for 12, 18, or the whole time, and over those 13, 14 months into the GFC low, their portfolios dropped by 50, 60%. So to me, time your entry into it and you'll make far better returns.
And so the obvious question, Dale, where are we right now in the cycle? It seems to me with the one of the longest bull runs in history, we have to be at the end of a cycle. This can't go on indefinitely. So what, another year of good and then is the time to buy? So if I have money right now, what do I do?
Yeah, I think today is still the time to buy, because you're absolutely right. We do break everything up into segments or phases of our market. So generally we'll see like a 20-year move from low to low. So in between there's a high. But 2/3 of that time market will be rising and about 1/3 will be falling. And I know I've spoken about some of those figures to you in the past, where stocks will rise 70% of the time. The S&P 500 rises about 78, closes higher every year, about 70 to 75% of the time it closes higher. So you're going to get about 2/3 of the time the market's rising. We're into that last phase, or that last moving into a longer term peak. That said, I don't expect any GFC style event to happen in the next decade. It's just not going to happen. But we will get a pullback of somewhere in and around about 15 to 25%, probably in the next 2 to 3 years, roughly. But right now we will be searching for a high, but 2020 looks bullish to me.
Yeah, I think it's going to be a fantastic year to watch. It's going to be a lot of fun. Dale, let's wrap it up what's going to happen this next week? What do you see? I see a lot of people starting to take vacation and the volume down a lot. What's going to happen this week?
I think the market's going to rise because we are moving into Christmas anyway, and normal thing is volume drops, but the market will continue to rise through till I'm pegging sort of late January, maybe even into February before we get the next shorter term peak. So the next 4 to 8 weeks, I think, are going to be bullish.
Fantastic. Dale, thank you so very much. Happy holidays to you, your family, and everyone down under. And we will see you next week. Again, Dale Gillham, wealthwithin.us. Thanks a lot, Dale, and have a great week.
Thanks, Jim. You take care.
And we will be back.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services license, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Well, as Jim said a little bit earlier, a week has been a long time in the market, and this week it's no surprises to see we've seen a real bit of the tale of two different weeks. One was a little bit more bearish, and then last week was a little bit more bullish. So let's have a look at the chart and see what's actually happening on the marketplace, and see how the Dow's reacting to all this news about Brexit, and obviously the impeachment that Jim was mentioning, and the US-China trade deal coming a little bit closer to being coming to be fruition. From there. But looking at the US market, it is still trending up quite nicely. If I blow that up, you can see here what happened last week. We opened, it traded right down to that low there at 27,325, came right back and closed just slightly higher than it opened. It's a very indecisive bar, but what happened here is the bears tried to push the market down, but they couldn't. They didn't have enough oomph. I suppose, nice technical term, they didn't have enough oomph to get in there. Maybe they needed a little bit more protein for breakfast, something like that. But the bulls came right back in at the end of the week to take it just a little bit higher, which was a nice sign after a strong week the week before. So that little bit of bearishness was over quite quickly and taking it to new heights. Now, I do think the market is going to be moving through. It's already moved through that 27,000 point mark, but I think it's got a lot more to go. And if I do this, and if I go scroll that up a little bit and I'll show you what I'm thinking. I'm thinking the market's going to go through to 28,000 points before it has a peak. I'm expecting it to do that probably by late January, maybe into February for the Dow. That could be a little bit longer, but right now it's looking like it'll go 28,000, and it'll move up into that area of around that $33,000 to $34,000, I think, before we have another more major pullback on the Dow. Now, I still expect the Dow to be nice and bullish right through 2020, and if the US-China trade deal happens earlier, it'll be more bullish a little bit earlier rather than a little bit later. But we've had an awesome year in 2020 with the Dow and the S&P doing quite well. I think the Dow's about 21%. I think the S&P is about 25, 26. So very, very good years on both of those indices, and I don't think that's going to stop at this point in time. As I said, 2020 looks to be really, really good. So don't panic yet. It looks nice, and I think the next major pullback that I was talking about with Jim is at least 2 years away, probably 2023 roughly, might be the next low. So that would be my guess at this point in time, but we'll only wait and see. The more information we get, the more we can make better decisions about the timing and the pricing of what that's happening. But for now, let's just get into our questions for the week. Now, the first question we have today is from Nick, and Nick says, "Hi mate, been loving the channel." Thanks matey, I'm glad you do love the channel. He said, "I've been looking at buying Amazon. It's definitely underperformed this year." Well, yep, absolutely. When you're looking at the FANG stocks, it has been, I think, the worst performer in the FANG stocks for the year. But he said it's definitely been underperformed this year due to various factors, medium to long term. There will definitely be growth. See your Black Friday comments. Yeah, obviously, I mean, Amazon's part of Black Friday. They do a lot of their, how do I say it, a lot of their sales over that period between Thanksgiving and New Year pretty much is where they make a lot of money, obviously, from that point of view. But again, there's a lot more competition. So Amazon's had it pretty much I won't say alter themselves in the online space. They've been dominant in the online space for many, many years. But now the bricks and mortar stores are fighting back. eBay's doing quite well and other online retailers are doing well as well. So not everybody's buying from Amazon. I don't think I've bought from Amazon for quite a while. I have bought several things from Amazon in the past, but I'm now going directly to other websites to get goods, and I'm assuming other people are doing the same thing. But he says thoughts technically on where would be a good entry point, Nick. Now, Nick, I don't ever give people entry points because it's dangerous for you to do that, because my thoughts today may be different tomorrow. Something might happen on the marketplace, and you need to understand why you're buying and why you're selling and how you're going to manage it. So I don't ever say buy or sell at this point, not on YouTube. It's just not the place to do it. I do that with our clients or our students, when they're working and they're analysing and they're giving me their entries and exits, and I'm fine-tuning them with it. That's what we do with our traders who are highly educated from doing our courses, but I just don't do that on YouTube. So sorry about that, matey, but I will have a look at the stock for you. So Amazon's on your screen right now. On the left side, you can see the monthly chart. The right side, you see the weekly chart. And what you're seeing here is just this bearishness we've seen a little bit this year. So here, if we look at, this is May this 2019, but you can see here that December, so that was December, so it's moved up strongly and come back a little bit. Right now, this stock isn't looking like it's going to go up. We're seeing this sort of bit of a consolidation pattern here, but if we don't see a really strong move this week or the next couple of weeks on Amazon, and if we don't see it strongly move through that point there, 1824 over the next 1 or 2 weeks, then this thing's going south. Because you're looking at this stock and it's had a very bullish run, as you can see. It's massive run over many, many, many years. And eventually all stocks will fall over because the money, they get too expensive for what they're doing. Now, yes, it's had like any other stock, it would have had a good sales over that Black Friday event and obviously through to Christmas. So making it, but the market factors all that sort of stuff in anyway. The big end of town who are buying these stocks, or the big percentage of these stocks, already factor that sort of stuff in. So what they might be doing now is starting to sell into that buying, or people like yourself saying, well, I like this stock. And so I'm going to get into it because it has come back. It hasn't performed that well. I think Amazon's only done about 19% this year, and one of those with the FANG stocks, and most of those FANG stocks have done a hell of a lot more. I think Apple's up around 70% for the year, so it has held back. But right now, I don't necessarily think it's bullish, so I wouldn't be buying it at all right now. I'd be waiting for it to tell me that it's going up rather than getting into it. I want to look at a couple of other stocks, but thanks for sending the question in, Nick, and please keep sending them in on. If you've got questions on any US stock or questions about the US market, please make sure you stick them below in our chat there on YouTube. I wanted to finish off today's report with looking at some of the semiconductor market or the chip manufacturers, because I've been saying most of the year I did like some of these companies because they have potential to do very, very well. Now, one of them here, one of the ones that done more poorly than some of the other ones is Western Digital, and you can see here it's quite volatile, but it has been moving up since December, but it's just had this little bit of a dip down, but it's looking a lot stronger. Last week it did very, very well, Western Digital, having a nice bullish run, so we might be actually seeing this stock as starting to move through and moving through this $65, $66 area here. So I do like it at the moment. I think if it continues to go up in the next week or two, I think then it's got more legs to be more medium to longer term bullish and go quite well. And there's blue sky above this sort of area around that $62 to $64 mark. So to me, just wait a little bit before you jump into it, but it is looking a hell of a lot better. Qualcomm was another one I've talked about a few times, and you can see how bullish this has been this year. And I've said quite often I do like this stock, and it's been doing really well. All it's done more recently down through this week here, back which Friday the 6th of December, it's just really come back to its normal angle or its momentum. So now it's looking really good again. Again, I still think this stock's got more legs in it. I think it'll do well into 2020. How well, I can't really tell you right here, but you can see here how it has been right up at these sort of high levels around $100 there. So I think it's got a little bit more legs in it to go a little bit further. And lastly, Nvidia, another big chip manufacturer, looking at beautiful steady run, doing very, very well this year, 2019. So this, as I said, I've also mentioned this a few times over 2020 as being a good stock. And I still see this trend moving up because it's still way off its high back here in October last year, it was $292. It's still moving beautifully, so I think it's got more legs on that as well. But looking at the different sectors, looking at where to find opportunities into the coming year. I know Jim and I did talk a bit about that last week on our report, and I did it on in the recordings that I did. So if you want to have a little bit of an idea of what I think is happening in the US market for 2020, go and have a watch of that video. But thanks for sending in your questions, and really thanks for watching till the end of this video. I do really appreciate it. But if you have any questions that you'd like me to answer, just stick them below. I'll answer them. So you get your fingers on the keyboard and get typing. And also remember, this is the US stock market report, so only US stocks on this chat. If you've got questions on Australian stocks, if you're an Aussie and you're looking at Australian stocks, put them on my Australian report. Don't put them on this one. Remember, I do these reports every week, so hit the subscribe button now and click the bell on the right of it so that you know when we go live with our latest stock market report. Now, this is my last report for this year. I'll be coming back a couple of weeks off. I'm having a bit of a break. So for you and your family, I wish you a very Merry Christmas, Happy New Year, and a very successful 2020. But for now, I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.